The first part of the summary of the book, Rich Dad Poor Dad, by Robert Kiyosaki, from Chapter 1 to Chapter 5.
The introduction of Rich Dad Poor Dad provides an overview of the book and introduces the two influential figures in the author's life, Rich Dad and Poor Dad. The author shares his background and experiences growing up with two fathers who had contrasting perspectives on money and wealth. The main purpose of the book is to challenge traditional beliefs and education regarding money and provide a different perspective on financial literacy. The author emphasizes that true wealth comes from understanding how money works and making it work for you, rather than solely relying on a job for income. The introduction sets the stage for the book by highlighting the importance of financial education and the impact it can have on an individual's financial success. It encourages readers to question conventional wisdom and seek alternative paths to building wealth. Overall, the introduction serves as an introduction to the central themes and ideas that will be explored in the subsequent chapters of Rich Dad Poor Dad. It sets the tone for the book and prepares readers to explore new ways of thinking about money and financial independence. In Chapter 1 of Rich Dad Poor Dad, the author begins by sharing his childhood experiences and introduces the two influential figures in his life, his biological father, Poor Dad, and his best friend's father, Rich Dad. He describes how these two men had contrasting views on money and wealth, which had a profound impact on his understanding of finances. The author explains that Poor Dad, despite being highly educated and holding a secure job as a government employee, struggled financially throughout his life. Poor Dad believed in working hard, getting a good education, and finding a stable job as the path to financial security. However, he was always stuck in the cycle of living paycheck to paycheck and had a scarcity mindset when it came to money. In contrast, Rich Dad, an entrepreneur and self-made millionaire, had a different perspective on wealth. Rich Dad emphasized the importance of financial education and acquiring assets that generate income. He believed in the power of leveraging money and making it work for you rather than being a slave to it. The author highlights the fundamental difference in mindset between the two fathers. While Poor Dad worked for money, Rich Dad focused on making money work for him. This distinction lays the foundation for the lessons the author learned from Rich Dad and shares throughout the book. The key takeaway from Chapter 1 is that financial education and understanding the difference between working for money and having money work for you are crucial for achieving financial success. The author challenges the conventional belief that a good education and a stable job guarantee financial security and encourages readers to adopt a new mindset about money and wealth. Overall, Chapter 1 sets the stage for the rest of the book, emphasizing the importance of financial literacy and introducing readers to the two contrasting father figures who shaped the author's views on money and wealth. Chapter 2 of Rich Dad Poor Dad explores the concept that the rich do not work for money. The author challenges the traditional notion of job security and highlights the importance of building financial independence through assets and passive income. The chapter begins by emphasizing that many people are trapped in the rat race, where they work tirelessly to earn a paycheck only to spend it on expenses, leaving them financially dependent and often struggling to make ends meet. The author argues that this cycle perpetuates reliance on a job as the sole source of income, limiting financial freedom. The author introduces the idea that acquiring assets is key to achieving financial independence. He defines assets as things that put money in one's pocket, such as real estate, stocks, bonds, or a business. In contrast, liabilities are defined as things that take money out of one's pocket, such as a mortgage, car payments, or credit card debt. To break free from the cycle of working for money, the author emphasizes the importance of shifting one's mindset and focusing on acquiring assets that generate passive income. He explains that passive income is income earned with little or no effort on the individual's part, such as rental income from real estate or dividends from stocks. The chapter also addresses the fear and uncertainty that often accompanies the pursuit of financial independence. The author highlights the need to overcome the fear of taking risks and venturing into unfamiliar territory. He encourages readers to embrace learning opportunities and develop their financial intelligence to identify profitable investments. Ultimately, Chapter 2 underscores the idea that working for money alone is insufficient for achieving true financial freedom. Instead, individuals should strive to build a portfolio of assets that generate passive income, allowing them to break free from the constraints of the rat race and attain financial independence. By challenging conventional beliefs about job security and encouraging readers to shift their focus toward building assets, Chapter 2 sets the stage for a new way of thinking about wealth and provides a foundation for the principles discussed in the subsequent chapters of the book. Chapter 3 of Rich Dad Poor Dad delves into the importance of financial literacy and challenges the limitations of traditional education in preparing individuals for financial success. The chapter begins by emphasizing that despite spending years in school, many individuals lack essential financial knowledge and struggle with managing their money effectively. The author argues that traditional education focuses primarily on academic subjects and does not adequately teach people about money, investments, and building wealth. The author introduces 4 areas of financial education that are crucial for financial success: accounting, investing, understanding markets, and the law. He suggests that individuals should invest time and effort into developing their knowledge in these areas to make informed financial decisions. Accounting is emphasized as a foundational skill, as it provides the ability to understand and analyze financial statements. The author suggests that individuals should learn to read and interpret income statements, balance sheets, and cash flow statements to gain insights into the financial health of businesses and investments. Investing is another critical aspect of financial education. The author highlights the importance of learning about different investment vehicles, such as stocks, bonds, real estate, and businesses. He encourages readers to understand the risks and potential returns associated with each investment type to make informed investment decisions. Understanding markets refers to being aware of the broader economic trends and cycles that can impact investments. The author emphasizes the significance of keeping up with market news, staying informed about global events, and recognizing opportunities that arise during market fluctuations. Lastly, the chapter touches upon the importance of understanding the law. The author suggests that individuals should have a basic understanding of legal structures, contracts, and tax laws. This knowledge can help individuals make informed decisions, protect their assets, and take advantage of tax benefits. In summary, Chapter 3 underscores the necessity of financial literacy and highlights the areas of accounting, investing, understanding markets, and the law as essential components of a well-rounded financial education. By encouraging readers to expand their knowledge in these areas, the author aims to empower individuals to make informed financial decisions and take control of their financial future. Chapter 4 of Rich Dad Poor Dad focuses on the concept of minding your own business and highlights the difference between assets and liabilities. The author emphasizes the importance of developing a mindset focused on building assets to achieve financial independence. The chapter begins by defining assets and liabilities. Assets are described as things that put money in your pocket, such as real estate, stocks, bonds, and businesses. Liabilities, on the other hand, are defined as things that take money out of your pocket, such as mortgages, car payments, and credit card debt. The author stresses the significance of understanding the difference between assets and liabilities and how they impact one's financial situation. He emphasizes that the wealthy focus on acquiring income-generating assets, while the middle class and the poor tend to accumulate liabilities under the assumption that they are assets. The chapter introduces the concept of the cash flow pattern. The author explains that the middle class and the poor often fall into the pattern of working for income, using that income to acquire liabilities, and struggling to meet their financial obligations. In contrast, the wealthy focus on acquiring assets that generate income and use that income to acquire more assets, thus creating a positive cash flow cycle. To shift toward building assets, the author suggests adopting a different mindset and approach to money. He encourages readers to evaluate their expenses and identify ways to reduce liabilities and increase income-generating assets. This can involve making informed decisions about spending, seeking investment opportunities, and pursuing entrepreneurial endeavors. The chapter concludes with the message that minding your own business means focusing on building assets and generating income rather than relying solely on a job. By developing a mindset that prioritizes acquiring assets, individuals can begin to shift their financial trajectory and move closer to financial independence. In summary, Chapter 4 underscores the importance of distinguishing between assets and liabilities and emphasizes the need to develop a mindset focused on building income-generating assets. By adopting the concept of minding your own business, individuals can start to build wealth and break free from the cycle of relying solely on earned income. Chapter 5 of Rich Dad Poor Dad explores the history of taxes and highlights the power of corporations in wealth creation. The chapter provides insights into the historical context of taxes and encourages readers to understand and leverage the advantages of the corporate structure for financial success. The chapter begins by delving into the history of taxes, explaining that taxes have been used by governments throughout time to fund public services and projects. The author emphasizes that taxes have a significant impact on wealth accumulation and that understanding how to navigate the tax system can be crucial in building wealth. The chapter introduces the concept of the 3 types of income and how they are taxed differently. The 3 types of income are earned income, income from a job, portfolio income, income from investments, and passive income, income generated from assets. The author highlights that the wealthy focus on building assets that generate passive income, which is typically taxed at a lower rate compared to earned income. The author then discusses the power of corporations and the advantages they offer in terms of tax benefits and wealth creation. He explains that corporations have the ability to deduct business expenses and reduce their taxable income, which can result in significant tax savings. The author encourages readers to explore the possibilities of starting their own businesses or investing in businesses to take advantage of these benefits. Additionally, the chapter emphasizes the importance of financial education in understanding tax laws and strategies for legally reducing taxes. The author suggests that individuals should seek the guidance of tax professionals and educate themselves on tax laws to maximize their wealth-building potential. Overall, Chapter 5 highlights the historical context of taxes and the advantages of the corporate structure. It encourages readers to understand the implications of taxes on wealth accumulation and to explore opportunities to leverage the benefits of corporations. By being knowledgeable about tax laws and strategically using corporate structures, individuals can optimize their financial situation and create a path toward wealth and financial independence.